Welcome to the morning market briefing. It is Friday, October 21st, 2022. Hope you're doing well out there. A lot of red out there right now, Ben. Dow futures down 75 basis points, S&P futures down 86, NASDAQ down 1.3, gold's down, silver's down, oil down just a tick. So if you're looking at your major indicators, even Bitcoin.
Interest rates up though.
Interest rates are up. Bitcoin under 19,000. So showing some resilience at that level. Let's jump in and start with the Liz Truss news. This kind of broke, I guess, officially during the call yesterday. But Liz Truss has resigned, a very powerful 45-day stint, which seems like that shouldn't be possible. I don't know. I still don't totally understand the political environment in the UK, but that's just wild to me.
Yeah, I do like I do think that there are some elements of the parliamentary system which are kind of interesting. Namely, it's not a wasted representative if you actually have a representative that's not one of the two major parties, because they can form a coalition and you still have some power. But yeah, having been there for 45 days is certainly notable. I would say, though, again, the flexibility of being able to just can them after they're clearly inept.
Yep.
I think that's probably good long term. Question is, who is her that going to replace her with? It looks like it'll be either Boris Johnson or Richie Sunak.
He's back.
He's back. He hasn't made a decision yet of whether he's going to be the savior. But right now, the Conservatives are very embarrassed. They've been in power for the last 12 and a half years. They pride themselves on being economically sensible. And, we did not have stability with Truss. You did not have economic sensibility. In fact, she called herself the disruptor in chief. Well, she disrupted herself. The next election is not till January 2025, but my guess is that they'll try to get someone in their calls to get some stability and have an election sooner than that. But the thing is, right now, if there was an election, the Conservatives would stand to lose hundreds of seats in Parliament to the Labour Party. So what they're trying to do this time is fast track the two candidates, two final frontrunners, again, likely to be Richie Sunak and potentially Boris Johnson. And Johnson would be the favorite if he decided to run.
What's the timetable on this? I mean, she said
Quick,
she'll
a week.
Okay.
October 28th is when they're looking to make the shift.
So, I mean, I don't know. We were kind of laughing about it yesterday afternoon. It's like you couldn't map out a more chaotic situation in Europe at large. It just keeps getting crazier.
I mean, this is going to be the third new prime minister in the last month in two countries.
Yeah.
You got Italy and then two in the UK. Although I guess maybe it won't be a new one. It'll be a new one as the old one. Yeah. Return of the King.
Yeah. Johnson is back. I don't know. I didn't have that on my European bingo card of things I expected to happen within 45 days. Just kind of a wild story. Definitely adds to European volatility. Although, I don't know. I mean, it's shocking from the outside looking in, but it certainly seemed to be trending this way very, very quickly. Pretty much from the moment she began operating as disruptor in chief. I mean, she was disruptive, self-aware, credit where credit's due. Elon Musk says he plans to cut 75% of the workforce at Twitter. Interesting call. What do you think his angle is with such a stark announcement as it relates to the workforce?
Yeah, so this would be layoffs to the tune of 6,000 people. My guess is that he actually didn't really think about this in a whole lot of detail. I think he's trying to scare Twitter and Twitter employees into rejecting Elon Musk's offer. And coincidentally, Elon Musk is now the subject of potentially national security reviews. U.S. officials are discussing whether to subject him to that, including the deal for Twitter and the Starlink satellite network. I don't think this is bad. If you're Elon Musk and you want out of the deal, you make as much noise, say people are going to lose their jobs, they're going to lose their livelihoods if I buy this company, and then coordinate with the U.S. And try to rabble rouse among the Twitter ranks to convince the board to reject Elon Musk's offer. So I think Elon sees the writing on the wall in terms of the argument on fake accounts in terms of that not giving him an out. So he's trying to get some more outs by basically scaring people into not selling the company.
Yeah, I mean, he's setting up this whole board of outs, really. He's, got this tremendous option. If you force him to go through with it, you're the bad guy, not him. And, it'd be interesting if they still forced him to go through what that actual cut number would look like. Does he actually have it in him to stick it out? But just a messy situation. Elsewhere, kind of in the, I guess, the social media space, Snapchat had earnings released yesterday afternoon. Stock's down about 25%. Revenue came in slightly lower than expected, was up about 6% year over year. EPS was, decent. Daily active users, pretty strong number, up 19% year over year. But the ARPU, average revenue per user, really taking a hit. And it sounds like things really kind of grinded to a halt late in the quarter. Ben, what did you see from them that might be a read through on other companies?
Yeah, they said brand advertising revenue was really soft. They talked about their software being really easy to turn on and off. So if you're trying to conserve money and you can do direct response, which you clearly see the resultant revenue from, or you can do brand advertising, which is more awareness driven and more holistic in terms of marketing. What you've seen is a lot of companies have just turned that dial off. So brand advertising was actually down in the quarter. That demand was down. The network itself was actually pretty strong in terms of daily active users. They also guided for 18% growth in daily active users for next quarter, which is fairly strong. But the implied average revenue per user for next quarter is down 15%, which basically says the advertising demand cycle is hitting these social media companies. And I think that that's something that when people talk about tech, which is a lot ad driven, they don't necessarily talk about the macro cycle. But I think what we're seeing with Snapchat and what we will probably see with Meta and also Google is that they are tied to the macro cycle. I'm actually surprised Meta is not down more than it is this morning. It's down about 4.5%. But yeah, Snapchat, not so good. And at least in terms of their guidance, and they're down about close to 30% now pre-market.
Do you have any read on, Snapchat says it's incredibly fast and easy for advertisers to turn digital performance advertising on and off. Speaking on their platform, do you have any read on how easy that is with a Google or with, maybe Meta's a better example?
I think it's easy, pretty easy with Meta. I think with Alphabet, Google, I think it's a little bit slower because typically you have whole departments that are working on this, and you don't just it's a much more strategic decision than trying to juice numbers. I think the reason you're seeing Snapchat really hit, and potentially Meta as well, is because no one is even going to try to hit their numbers, because the ROI right now it's not there for them. They're not receiving that incremental sale for that dollar spend.
Good stuff. Got a lot of earnings reports in, and we'll have a lot next week that we can kind of preview maybe at the tail end of this call, but do want to hit a couple of these today. First up, American Express, down about 4%. Really seems like another company being impacted by a negative macro narrative this morning. They were able to kind of be in line with expectations, but not necessarily by a real remarkable level. How would you kind of digest their quarter and their outlook?
Yeah, I think they're getting a hit a bit more than they normally would, because they have been down. The stock has fallen significantly. They'll probably do $10 in earnings per share this year. They just raised their guidance. So you're talking about a stock that is not trading at an onerous multiple, kind of 13 to 14 times earnings. But what I think you're seeing there with American Express is the writing on the wall a little bit in terms of the macro cycle. Although American Express talked about the consumer remaining robust, network volumes in constant currency fell to up 23%, which is a good number, but it was 28% last quarter. I was hoping for a little bit more of persistence in terms of those revenue numbers, because GDP actually improved over the quarter and consumer spending seemed to improve. So I was a little bit perplexed at why they weren't stronger. And also, especially after the banks reported, I thought that, you were a little bit more tilted to the upside in terms of the potential result for American Express. But I think this is it's a Rorschach test for the market. And right now the market is saying, we don't really care what you just put up. We care where you're going, and where we think you're going, meaning that where the market thinks the macro is going, is to the downside.
HCA also reported right now they're down kind of in that 4.5% range. They were down closer to 8. The stock's at about 199 earlier this morning. It was at 193, 194, kind of in that range. What's kind of the narrative we're starting to see from the healthcare space that seemed to be kind of a potential safe haven in this volatile economic picture? Would you agree that that's holding up in the commentary that you've gotten from HCA?
I actually do. You're seeing a little bit of a stabilization in terms of salaries and benefits at a higher level, but a bit of a stabilization there. But the problem for HCA right now, and also Tenet Health is down about 22% this morning. Another hospital, and they have a bigger ambulatory surgery business too. But you have ER, which is really getting hit, and everyone knows that emergency room visits tend to have higher dollar values associated with them. Well, if you're cycling over a COVID period, you're seeing slower ER visits this time around than you did last year, which is probably good for the overall healthcare system, but it's not so good for the hospitals. On the flip side, you are seeing an improvement in procedure volume. So surgeries, colonoscopies are actually taking off again. And I think that's good news. The question is, does procedure volume continue to post good numbers if the macro economy begins to decelerate? Because a lot of these are more elective procedures, which could be turned off in a recession. I think that the company remains robust. They're trading at about 11 times earnings, which is pretty cheap for a business that should be relatively robust to the cycle. So I think that for Tenet, I don't know that company as well. HCA, their conference call is at 9 a.m. this morning. I want to hear news about procedure volume continuing to be robust and potentially a stabilization in ER visits going forward, and setting the stage for a positive 2023. So that's what I'm looking for at 9 a.m. I don't know if we're going to get it, but that could get the stock back to even. If they don't say the right things, it could go back down to 8%.
Yeah, and Tenet had, part of it was that that outlook was negative, and there was just a lot of noise around that report.
Yeah.
Next week, super busy week. We'll have earnings on Monday afternoon from Discover. Tuesday morning, we'll hear from GM, Valero, General Electric, all kinds of others in the afternoon, big afternoon with Microsoft and Google reporting. Wednesday, we'll hear from Meta in the afternoon, which will be interesting. Thursday, a slew of earnings coming in. We'll also get Q3 GDP. We'll have an ECB meeting as well. And then the afternoon, Apple and Amazon's Thursday. Just a massive, massive day. And then Friday, looking forward to that British election, or selection rather, is probably the more appropriate word there for the prime minister. Also a Bank of Japan meeting, next year report. I mean, it's just a nuts week. If you had to kind of distill into just a handful of things you think will be most indicative of the direction of the markets next week, what are you looking at?
I think early in the week, you're looking at Microsoft and Visa, and potentially Texas Instruments as well. Those report Tuesday afternoon. But really, Thursday and Friday could be two of the most consequential days that we'll see in the fourth quarter and maybe this year. In the morning, you have the GDP number, which will probably be a bit of a non-event, maybe some noise around it, but especially you have the ECB meeting, and I expect them to hike rates potentially significantly, and hurting the European economy and even more. And if that's not enough, then you got Apple, Amazon, Intel, and Pioneer Exploration. Huge, one of the largest U.S. oil companies, the largest U.S. chip maker, the largest company in the world, and one of the most valued retailers in the world in Amazon. That is going to be massive. And that all goes into the Friday morning, where overnight we actually get a Bank of Japan meeting. And right now the yen is falling into the Pacific Ocean. It's 150 to the dollar. When I started in this business, we were at 80. It's devalued by double. And the reason it's devalued by double is because the Bank of Japan has anchored rates at 0.25%. The only way they can do that is if they just buy Japanese bonds all the time. and they do that with printed money. And so you print your money that much and you weaken the yen incredibly. Now what you're seeing is a bunch of hedge funds are going short the bonds, which makes the Bank of Japan buy even more, which makes them print money even more. This thing could just totally blow out. And that's what a lot of people are betting on. It might be overdone in the near term, but there is no off ramp for them. And I don't know how it gets better.
Yeah, next week's gonna be nuts. We should have some pretty spicy calls next week. So I would encourage you guys to stay tuned. And if you don't listen live, check out the podcast. It's on Spotify. It's on our website as well. Also on Apple Podcasts and all those apps, whatever. We'll also kind of continue to do the end of week market memo. So look for that this afternoon. Other than that, hope you guys have a great weekend. Lots going on. I mean, I would say, Ben, it's gonna be a crazy week, but I don't know that should necessarily be construed in a negative sense. I mean, there's opportunities.
If we didn't have Snap today, I think I would probably color it positively, actually, because of how much is priced in already. What has me a bit nervous today is the fact that the market is solely looking at where we're going, and it just doesn't look great. So that's what I'd be a little bit nervous of, but we're going to get a lot more information next week, and we'll just have to be dynamic and agile to adjust to that.
Yeah, you got to be agile. And I think, the counterpoint to the Snap argument would be, I don't think anybody at this table would necessarily sit here and say Snap has the single best pulse on how to run a company and the economic outlay. So, there is the chance that potentially they're saying things that other people aren't doing, and they just don't have solutions, that they're being backed into a corner and they're the first ones to go, and others maybe are not seeing the same impact, maybe have a little bit more optimism. So we'll keep an eye on that. Hope you guys have a great weekend, and we'll talk to you guys Monday morning at 8:30.